Hey guys, welcome to Robinhood's quarterly update Q2 24. Lots of exciting updates with real step changes in some of the areas. Here, if we look at the highlights, you see one of the areas of real step change in the net deposits. But moving on, then that flowed through also, well, obviously to net revenues and then the net income. Let's have a look at the product roadmap that they have provided updates on. One exciting area is that they've now extended their crypto staking to Europe. And staking, for those who may not know, is, well, similar to, I shall wash my mouth out, but it is similar to getting interest on cash deposits at a traditional bank. It is quite different and heresy to compare crypto to cash and fiat currency, but in any case, that's the best way to understand it. From a risk-reward spectrum, it is far more on the right top-hand corner than traditional bank deposits. You can, with staking, can be in the low single digits to low double digits, depending on the exchange, the cryptocurrency that you're doing the staking in. And the other one that I found very interesting is, again, related to crypto, very crypto-heavy this time. The announcements or the product roadmap. So they have agreed to acquire Bitstamp, which is a crypto exchange with a lot of customers. They've been one of the oldest crypto exchanges around. And Vlad Tenev, the CEO of Robinhood, said the main drivers were the international, extending the international and institutional reach. So I thought initially maybe that is to reduce their fee structure on crypto trades, but apparently it's even higher on Bitstamp than on Robinhood, and they said they will keep their aggressive low fee structure on crypto trading. And so that's a very interesting update. And then they also, it's not listed here, they have also announced the acquisition of Pluto, which is an AI-based advisory type platform. Let's see what they will be sharing on that one in the coming quarters. So this one just relates back to what we just covered. The user numbers are increasing nicely and steadily with no drawback overall over the last 2 years. So here is assets under custody, which this is not revenue. This is just the valuation of the assets that they are the custodian of, or they're not managing. It's not assets under management, it's assets under custody. They're holding from their customers. As you can see, all areas are growing. And the main driver is the growth of the valuations of the markets. So equity markets are growing, but there's also higher net deposits, as they're calling it out. It's also driven by net deposits, not just by the markets going up. And crypto is increasing, as you know. I mean, it's had a real good run in the second half of the calendar year 23. Plateaued a bit in the Q1 and had some jitters in Q2, and we can see that in those valuations. But there's been inflows, as you can assume from these numbers also. And that's this one, the light green. And the one that I also wanted to call out, really interesting, is how the net cash held is at quite high levels. It's probably around 15% of the total assets under custody. Whereas look back a few years, just 2 years back, it's in the 7% region, which is what we would have expected for a platform like Robinhood. And it shows that their offerings in the interest-bearing offerings have been gaining attraction. And we'll cover that in a moment. That probably has to do also with the gold subscription, which we'll come to that in just 1 second. But relating to the gold offering is probably also the really surprising growth in their retirement offering. Now, they have had that for quite a while. It's not a new offering. It's been around for years. But have a look how it's been growing. The number of retirement accounts have, almost tripled in a year. That's a very generous tripling from 300,000 to 820,000. But the funding per account has almost quadrupled in 1 year, and both together, multiplied together, has led to retirement assets under custody 11-folding. That is pretty staggering. So retirement accounts, it's not like you move them around all the time. So this has to do also with higher customer lifetime value offerings. So that's a big change here. Then now we're getting to the gold. Gold is their subscription offering. So we're not talking about the asset class of gold. Talking about their subscription offering. It's a $5 per month, and there's all sorts of benefits included. The cash sweep, which is one of their interest-bearing offerings, sits at 5% annual percentage yield on uninvested cash. So that is pretty good. I mean, there's many banks that don't offer that. So it's not a surprise if we have seen here that that the net cash holdings are in the 15-ish percentage of the assets under custody. That's pretty staggering for what was supposed to always be a trading platform. Their retirement. And we see that here. That is, I'm not making this up. We see here that assets under custody for those who have got the gold subscription are 7 times of those who don't. And the retirement adoption rate is 5-fold. So pretty strong offering. And the gold subscription is relatively new. I don't know how old. I would guess, feeling-wise, not more than 2 years. And it costs only $5 a month. I mean, what do you get for $5 a month subscription? Just right now I can't remember. Well, the Twitter basic subscription is even $5 a month, and literally, I'm sorry, the X basic subscription is $5 a month. So it's not a lot that you get for that kind of a subscription fee, and I would think it's likely that once they got a bit more of a captive audience with the retirement accounts, etc., that will go up. But as a customer acquisition channel, it seems to be an amazing channel. Again, here, this is a real step change. Net deposits, how they've grown, and we can see that also in the next one. Have a look at this. The longer, the more faint green ones, they've been around. These cohorts, these are quarters, so 16 quarters. These guys have been around for 16 quarters. They are growing, yes, but they have started at deposits of below $2,000, maybe $1,000 initial deposit, which have then grown over time. So that 16 quarters, that's about 6 years. But look at the latest cohorts. They're really kind of smashing in the money. Well, 7,000. A private hedge fund would not accept anything below 10,000. But for smaller investor accounts, that is pretty remarkable. Look at the growth rates here. I mean, that's really remarkable. Then these are the revenues. So this is real revenue. Previously, we talked about the assets under custody. Again, we do see a real step change here. And what's the story behind it? Trading or transaction revenues are back, mate. That's what's going on. Look here. They were really floundering, and read our article about it on digitalbizmodels.com. They were really receding in 2022 and 23, and interest-bearing offerings, they picked up the slack and they held the revenue somewhat stable, and they're still stable. Even, I mean, here it has really grown, but transaction revenues are back. So that's the big change here. And here we see it a bit more detailed. Options and crypto has come down a lot. Yeah, this is where the Bitcoin jitters were in Q2. You may remember they went up to probably around 70K, and then went down to 55 or something. And there's been quite a bit of volatility in Q2 24, and so that always spooks people. Just equity and options trading are back in the race, and this is the interest-bearing revenues and pretty stable growth. That's the story. If you want to learn more, so the rest we'll just now operating expenses. That's the last one we'll cover. What I always like, the biggest one is technology and development. That's good. So it also ties back to their technology roadmap that we looked at. It's not just that acquisition, but some of it is just really their own developments, investments. The one that I like a bit less is G&A, general and admin, still really high, still even at around a quarter of all expenses are general and admin. That's, in any case, take a look at take overall a great 2 quarters, great results with some real highlights that we've seen. If you want to learn more about their business model, go to our store, digitalbizmodels.com/store. We got a lot of great products. We're the only ones who are really focusing only on digital business models. And if you want to learn about fintech, go to our Fintech Business Models book. And we are covering Robinhood as well as 5 other ones. There's a Coinbase, PayPal, Fiserv. You may not know them, but take a look at their share price. They are the hidden giant. There's no other fintech company that had such a share price development over their existence as Fiserv and some other ones. So yeah. And last but not least, well, we've covered the investment update. This is no investment advice. We just love to look at business model and financials and everything. So this is a business model update for Robinhood. Thanks very much.